Dylan Jovine claims to know certain stocks that will gain 5,889%. And I reveal the stocks being pitched so you don't have to buy his newsletter, which costs thousands. There are 4 stocks to uncover, so we're just going to jump right into it. This presentation is about defense stocks that will benefit from an American and Chinese conflict. The first stock is a hypersonic weapon stock. A hypersonic weapon is a missile or projectile that travels at speeds of Mach 5 or higher, maneuvering unpredictably to evade defenses. Jovine drops a lot of clues about this stock, and he references an article from Flight Global that says the smallest company won the contract, which refers to a military contract. I found the article Jovine was referencing, and it reveals the company Jovine is pitching, which is Leidos. Jovine is constantly calling this company small and tiny, which to me is pretty misleading considering this company has a market cap near 20 billion and a stock price near 150. Leidos is a prominent U.S. technology and defense contractor specializing in advanced solutions for national security, civil, and health sectors. Leidos leads the U.S. Air Force Research Laboratory's Mayhem program, officially known as the Expendable Hypersonic Multi-Mission ISR and Strike Platform. This initiative aims to develop a large-class, air-breathing hypersonic vehicle powered by a scramjet engine, capable of executing both intelligence, surveillance, reconnaissance, and strike missions. The Mayhem system is designed to surpass current air-breathing systems in range and payload capacity, utilizing digital engineering to facilitate future development and transition. I think this stock is a buy, and here's my top 5 reasons why. First is earnings momentum. Leidos surpasses Q1 expectations. In the first quarter of 2025, Leidos reported adjusted earnings of $2.97 per share, exceeding the consensus estimate of $2.47 by 20.2%. Revenue grew by 7% year over year to $4.25 billion, reflecting robust demand in its defense and intelligence sectors. Second is strategic acquisitions, enhancing AI and cyber capabilities. Leidos recently acquired Kudu Dynamics for $300 million, bolstering its artificial intelligence-driven offensive cyber and electronic warfare capabilities. This move positions Leidos to better serve defense, intelligence, and homeland security clients with advanced AI-enabled solutions. Third is positive analyst outlook, stock performance and ratings. Leidos' stock has gained approximately 10.7% over the past year, outperforming many peers in the defense sector. Analysts have given it a consensus rating of moderate buy, with a target price of $180.69, indicating confidence in its growth trajectory. Fourth is consistent dividends, shareholder-friendly policies. Leidos offers a dividend yield of 1.05%, with an annual dividend of $1.60 per share. The company has increased its dividends for 7 consecutive years, demonstrating a commitment to returning value to shareholders. Fifth is robust government contracts, securing long-term revenue. Leidos secured a $390 million contract with the NSA for signals intelligence and a $205 million contract with the Defense Threat Reduction Agency for IT modernization. These contracts underscore Leidos' strong position in securing significant government projects. I'm going to reveal the rest of the stocks in 10 seconds, but I just want to remind you to click the link in the description to check out Alpha Picks. This is by far the best stock picking service, and if you click the link in the description, you'll get $50 off this service. Here's how Jovine describes the second stock. Warren Buffett's first defense stock buy in 10 years. Jovine also says, Warren Buffett, arguably the best investor on the planet, just invested a 9-figure sum in this company. This one is easy to figure out, and the stock is HEICO and the ticker is HEI. HEICO Corporation is a US-based aerospace and electronics company founded in 1957, headquartered in Hollywood, Florida. It specializes in designing, manufacturing, and servicing products for niche segments within the aerospace, defense, space, medical, telecommunications, and electronics industries. In the defense sector, HEICO is a U.S. Department of Defense prime contractor, supplying aircraft parts, components, and repair services. Their products are integral to various military platforms, including aircraft, missiles, and targeting systems. The company also engages in reverse engineering and manufacturing to support defense sustainment efforts. I think this stock is a borderline buy, and the biggest concern is valuation. Here's a breakdown of why I think this. First is Flight Support Group soars high. HEICO's Flight Support Group reported a 19% increase in net sales in Q2 2025, with organic growth at 14% and operating margins reaching 24.1%. This segment's robust performance underscores its strength in the aerospace aftermarket. Second is record-breaking financial performance. In the second quarter of 2025, HEICO achieved a 15% increase in sales, totaling $1.1 billion, and a 27% rise in net income, reaching $157 million. These figures highlight the company's strong financial health and growth trajectory. Third is analyst confidence despite valuation concerns. Analysts maintain a moderate buy consensus on HEICO, with price targets ranging from $267 to $340. While the stock trades at a high PE ratio of 64.5x, this reflects expectations of continued strong growth. Fourth is strategic acquisitions fuel expansion. HEICO's acquisition strategy, including recent purchases like Rosen Aviation LLC, has bolstered its market position and contributed to its growth in the aerospace and defense sectors. Fifth is valuation, a double-edged sword. Despite strong performance, HEICO's current share price of approximately $299 suggests limited immediate upside, with some analysts estimating a fair value around $264. Investors should weigh the premium valuation against the company's growth prospects. Here's what Jovine says about the third stock, the hypersonic missile firm revolutionizing warfare. And then Jovine says they just secured a $1.5 billion DoD contract to build an advanced hypersonic test bed. This stock is Kratos Defense and the ticker is KTOS. Kratos Defense and Security Solutions Inc. is a US-based defense technology company headquartered in San Diego, California. Kratos specializes in developing affordable, high-performance systems across several domains. First is unmanned systems, notably the XQ-58 Valkyrie, a stealthy, jet-powered drone designed as a loyal wingman to support manned fighter aircraft. Second is hypersonic technologies. Kratos is advancing hypersonic systems, including the Zeus solid rocket motor and the MAC-TB testbed program, supported by a $1.45 billion Department of Defense contract. Third is satellite communications, providing ground systems and software for satellite command, control, and telemetry, supporting over 85% of U.S. space missions. Fourth is training and simulation, developing virtual, augmented, and mixed reality training systems to enhance warfighter readiness. Fifth is microwave electronics and missile defense, supplying advanced electronic systems for radar, missile defense, and space applications. I've recommended this stock in the past and it's done well. At the moment, it's more of a hold now because of valuation. Here's what to know about this stock. First is hypersonic horizons, Kratos' $1.45 billion leap into the future. Kratos secured a monumental $1.45 billion contract for hypersonic testing under the U.S. Department of Defense's MAC-TB program. This positions the company at the forefront of next-gen defense technology, promising substantial revenue streams ahead. Second is steady climb. Q1 2025 shows promising growth. In the first quarter of 2025, Kratos reported revenues of $302.6 million, marking a 9.2% increase year over year. With a book-to-bill ratio of 1.2 to 1, the company's order backlog is growing, indicating sustained demand for its products. Third is drone dominance, Valkyrie and beyond. The XQ-58A Valkyrie, Kratos' flagship unmanned combat aerial vehicle, is nearing production-ready status for the U.S. Marine Corps. With multiple variants in development, Kratos is solidifying its position in the tactical drone market. Fourth is expanding horizons, from satellites to cybersecurity. Beyond drones, Kratos is making strides in satellite communications and cybersecurity. Their diversified portfolio reduces risk and taps into multiple high-growth sectors within defense technology. Here's what Jovine says about the last stock, the behind-the-scenes company that makes it all possible. And Jovine continues and says, next, there is a tiny firm that specializes in precision-engineered forgings and high-temperature materials for defense applications. And then Jovine says, they already supply components to all the key players in U.S. missile defense, including Lockheed Martin, Raytheon, Boeing, Northrop Grumman, and even to the Department of Defense itself. It's backed by billionaire investor Paul Singer. This stock is ATI Inc. and the ticker is ATI. ATI Inc. is a US-based manufacturer specializing in advanced specialty materials and components. Headquartered in Dallas, Texas, the company was formerly known as Allegheny Technologies Incorporated and rebranded to ATI Inc. in 2022. ATI's materials have been integral in numerous applications, such as every new generation of aircraft over the past 50 years. Jet engines, from early designs to current and future models, emphasizing power, fuel efficiency, and reliability. Armor for protecting personnel and equipment against evolving explosive threats. Advanced materials enabling deeper and more extreme oil and gas exploration. Clean energy solutions, including components for solar panels, wind turbines, nuclear reactors, and emission control systems. I like ATI a lot and think the stock is a buy, and here's why. First is skyrocketing aerospace and defense demand. ATI's aerospace and defense sector, comprising 66% of its total revenue, experienced a 23% year-over-year growth in Q1 2025. This surge is fueled by the increasing demand for next-generation commercial jet engines and defense components, positioning ATI as a key player in these booming industries. Second is robust financial performance. In the first quarter of 2025, ATI reported a 10% year-over-year revenue increase, reaching $1.14 billion. Their adjusted earnings before interest, taxes, depreciation, and amortization rose to $194.6 million, up from $151 million the previous year, and adjusted EPS came in at 0.72, surpassing analyst expectations. Third is strong analyst confidence. ATI holds a strong buy consensus among analysts, with 7 out of 9 recommending a buy. Price targets range up to $105, indicating potential upside from current levels. Fourth is strategic expansion in additive manufacturing. ATI has commissioned a state-of-the-art additive manufacturing products facility, enhancing its capabilities in large-format metal additive manufacturing. This move positions ATI at the forefront of advanced manufacturing technologies, catering to evolving industry demands. Fifth is impressive stock performance and technical indicators. ATI's stock has seen a significant rise, with a 55% increase noted recently. The company's IBD Smart Select composite rating improved from 80 to 97, placing it in the top 3% of all stocks based on performance metrics and technical strength. And if you want to learn about more advanced defense stocks, click the video below. There you will see 4 defense stocks that Jason Simpkins believes will gain several thousand %.